There's a lot of emotion involved, and that's usually not a good thing.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time.
Welcome, everyone, to Alt Investing Made Easy. We just wanted to add in a little brief introduction to this episode with our friend and fellow investment advisor, Carlos Cardenas, because a lot has happened with the market since the time that we recorded, and we just wanted to share a few comments with you.
Yeah, for sure, Sarah. You know, we record these episodes a couple weeks in advance, and we're recording this little intro April 9th, 2025. It's following the meltdown in the public equities markets that we've all been observing over the last week. And, you know, we think that this episode with Carlos is timeless in the sense that it addresses financial planning. And we're never in a place where we're trying to time the markets. We're just really trying to encourage people here with fundamentals, and the Carlos's practice focusing on financial planning is really about that no matter what the market conditions are, you can engage in financial planning for, your financial abundance. And so we would be tone deaf if we didn't give a little nod to what's going on in the markets, but we remain optimistic because there's always an opportunity to learn more. And the more you know, the better investor you'll be.
Right. And also, I think there are people out there like Carlos and the people at Austin Wealth Management who have the knowledge to be able to support people through this kind of times. So it might be the time that planning and seeking advice is even more recommended.
Yeah, well, we hope you enjoy this episode.
Thank you. Welcome, everyone, to Alt Investing Made Easy. Today, we're very excited to present to you a conversation with our friend Carlos Cardenas. He's with Austin Wealth Management, where he serves as Director of Business Development. And Carlos is here today to talk to us about the importance of strategic planning in your wealth building journey. So welcome today, Carlos.
Thank you so much for having me, you guys. We've been talking about this for a while, and I'm very, very excited to share my experience with you guys.
Thanks for joining us, Roland.
Yeah, thanks so much, Carlos. And It's been great getting to know you, particularly at the meetup where we meet, every Tuesday with Ken Harris, our commercial real estate discussion group here in Austin that we really enjoy. And it's helped me build my practice immensely, my law practice, and it continues to. But Carlos, as we've gotten to know you more, we've understood more about your investment advisory practice, which focuses on, Austin Wealth Management really is focusing on a fee-based planning. And you have an interesting planning program that I think you're going to tell us about today that's targeted for people who are focused on investing in real estate. And we talk with so many people about real estate, commercial real estate deals that come up in our practice more frequently than really any other type of alternative asset. But I think our audience should be well educated about the roles that investment advisors play. And the reason why we can work together is because you're focused on planning, and we don't want to misrepresent real advisor services as being able, we don't have expertise in the planning aspect of the investment advisor world, but that's really where you come in. And again, just like Sarah said, you focus on strategy, and then maybe we can help with tactics, with the specific opportunities and the types of deals that we like to promote. And so real quick, before Carlos is, and we are both registered investment advisors, but this podcast doesn't constitute investment advice. Before we can give investment advice, we have to have an actual relationship, that we try to present educational topics here, inform investors more about what they need to know investing, engaging with investment advisors. And we're going to provide our contact information, of course, and Carlos's contact information. And if you want to get in touch with us, we'd love to talk with you more. But don't take anything here specifically as investment advice.
Exactly.
So Carlos, normally we like to start out with hearing a little bit about who you are. And what we've had a chance to chat, but also just from reading the notes that we exchanged, I thought you've had a really interesting background, and you've mentioned that you've got expertise in a variety of asset classes, alternative asset classes, and that has led you to have a generalist expertise that makes you probably perfectly positioned to help people with the strategy that you mentioned earlier, and that we'll get more into now. So you want to tell us a little bit just about who's Carlos and how did he get to this place today?
Yeah, it's interesting. Things have gone full circle for me, so I'll try to be brief. I was born in South America, and my parents immigrated to the United States. I was only 2 years old. And, I grew up in Central Texas in San Antonio, and fate, took me to Europe when I was in my mid-20s, and I spent almost 20 years in Europe, where I was an art dealer. I was a high-value art dealer. I was working with the Picasso family, and we were working with Christie's and Sotheby's, and all of our clients were ultra high net worth individuals. And it was, very rare air, but definitely it was, fine art as an asset class. And that's the sort of core of my background. And that developed into, a broad expertise, as you mentioned, in all things alternative assets. So that later evolved into investments in the tech industry, in the tech and media industry. And there were also investments in a lot of healthcare, different related projects. So this includes commercial real estate for healthcare. This includes some, JVs with laboratories and wellness spas and consumer packaged good firms. And with the real estate projects, that developed into ground up development. So active and passive positions in residential real estate, commercial real estate, land development. So all sorts of different, business models. So it was, when I was pretty far down the path, I kind of had a light bulb moment where I realized that I was essentially a wealth advisor, a wealth manager, and that I had become something of a generalist, but with a lot of experience in all of these different fields. So, I did come to the realization that I was something of an expert generalist, and that put me in a good position to sort of use my experience, the good, the bad, and the ugly there. So a little bit of everything. Nothing teaches like experience, I think, So, we learn, or we have, you win or you get lessons. So anyhow, I wanted to apply. Yeah. I wanted to apply my experience, to the service of others. And here I am at Austin Wealth Management.
Yeah, that's the thing about being a professional service professional is realizing that we really are servants to our clients, and having that servant mentality. It's maybe has some negative connotations, I think, but it also can be very positive. And it's important to remember that. In our role, we owe our clients fiduciary duties of loyalty and confidentiality. And so these are very important things to think about when you're talking with an investment advisor. They do really have a duty to you as an investor to watch out for your best interest, even in advance of our own. And that's it's servant leadership. I mean, it's a thing. So I really like how you brought that up, Carlos.
Yeah, absolutely. The core of our service, maybe the North Star is, we start with our clients' values and their goals. It's not about us or our service or anything. I mean, we are here to serve others. And like you said, we have a fiduciary responsibility to act in their best interest.
Right.
Well,
So,
go ahead,
sorry,
sir.
go ahead, Roland.
Well, I was going to follow up and just kind of get into the idea of the fee for service versus a percentage of AUM. But were you going to say something else, Sarah?
No, I was just going to ask you to describe a little bit exactly what it is that you provide for in the strategic planning side, because this is something that, as we discussed, is really important. But what does it even mean, and how do you do it?
Yeah, absolutely. So we are a full service independent RIA. Independent meaning that we don't, sell any proprietary projects or products or positions at all. We're not a bank. We are strictly an advisory firm. So yes, we can charge a fee for our services, and that is based in a planning fee. It can go into assets under management. But maybe a way of looking at it is if you think of an iceberg and the tip of an iceberg. Okay, your typical Wall Street firm will focus on the tip of the iceberg, which is the assets under management. Their business model is based almost exclusively on that. Well, a firm like ours is actually based on the planning piece, which is everything underneath the surface. It's kind of boring stuff, okay? But this includes liquidity management, cash flow management, risk management, retirement planning, tax optimization, estate planning, business exit planning, if this is relevant. So, our value is based on bringing deep analysis to the sort of underlying structural pillars that hold up a financial foundation. So at one point, this will include, if it makes sense for the client, to manage their investments. But that is not necessarily the case. Our business model is based on the planning piece first and foremost. So this is about essentially designing and implementing a system.
So maybe an example, Carlos, of a case study that you could share, or success story.
Yeah, there's so many, and they're all unique. They're all different. There is no one size fits all. We do not have any account minimums. So, we do have kind of a sweet spot where it makes most sense for our clients and for ourselves. But we have, some clients that are definitely, a little bit more modest in their professional means. And we also work with ultra high net worth families. All of their needs are very, very different. So for example, if it's an employee at a tech company, we have, somewhat limited options when it comes to, optimizing their taxes, for example, but we want to make sure that all of their deductions are checked off and are leveraged, as much as they can be. We have to manage, their RSUs and stock options and things like this. We have to consider all of, for these clients, we have to consider this. If somebody's a business owner, then we can do a little bit more in terms of setting up different entities, different pass-through, strategies. So it really, really depends. But what we see are small improvements that compound over the long term. So we're not really about a sort of performance-based value add, especially in the short term. What we're doing is we're establishing good habits, a solid strategy that includes well-diversified portfolios, and entity structures that are also optimized, once again, according to the client's goals. And by, implementing these small incremental changes, they grow over time. So it's a slow process. But that's where compounding really, really kicks in.
I just have an observation, Carlos, and I think just to maybe say I come to you and, I'm a family and I've got kids that need to go through university, and one partner has their own business and the other person has a W-2 job. And so it sounds like what you're providing is actually such an important service because, first of all, if you're busy and you're not a lawyer or a person who works in this space, even the prospect of setting up an LLC sounds a little bit daunting, right?
Yeah.
Or you start the process and then don't finish it because you get busy and you get confused or whatever. And then the tax element, because I do think that's a really cool thing that you do, like if you have an ability to support people in sort of strategizing about their taxes as opposed to potentially, the nitty gritty that you get into with your CPA necessarily. But if you're strategizing about tax planning, especially when you have, not complicated, but the business on one side, of W-2, et cetera, et cetera. So it sounds to me like it's actually just a very practical service that you offer, which is what so many people need. Of course, high net worth individuals are accustomed to the array probably of wealth management options out there. But, other people need to get planning too. And then you've got university, of course, school costs, all those things to throw in the frame. So I think just want to emphasize that what you're talking about is, and making that available as a fee for service, as a instead of just being assets under management is so critical. I want to make sure this point is clear. The reason it's critical is that it means that even if you don't have many assets under management, then, Carlos and his team still want to work with you because
absolutely.
You can pay the fee of whatever this fee is for you, and, put a little investment there, but don't have to worry that you don't have enough equities, you don't have enough measurable assets under management. You take into account these other things, maybe this, the value, all the different ways assets you might have that aren't necessarily where a traditional wealth manager would want to have their hands on them for management to calculate their fees against, right? So I think that's really a brilliant solution, and I want to make sure that's highlighted here for people that might be listening.
Yeah, thank you. Well, there's a lot to unpack in what you said. I think a fundamental issue is the idea of peace of mind. I think that for me personally, and I know we share this value here at the firm, is at the end of the day, we want to give our clients peace of mind. We're in the peace of mind business. People are busy, they're stressed. And most people, regardless of their situation, some people have, more zeros on their net worth than others. But at the end of the day, we all have moving parts that needs to be managed. And it can be very quickly overwhelming, even at a small scale. So what we want to do is to take as much that we can off the plates of our clients, give them peace of mind, and store a sort of system. And like all systems, they need maintenance. So we need to approximately every 4 to 6 months, sort of touch base with our clients and make sure that the system is running smoothly. And this is important also considering that markets change and there's, bull markets and bear markets and times of stress and uncertainty. And we design systems that work as they're intended, regardless of the market situation. So this comes down to sort of long-term strategic planning. So peace of mind is absolutely key. Absolutely. Yeah.
I would say just personally, or sorry, Roland. He's coughing. That, and just again to reemphasize, it's also whether it's personal or also businesses, in the rest of the world, people take longer business plans than necessarily we have here in the United States, right? The market isn't, it's in the rest of the world, it's not necessarily that you have quarterly earnings that determine everything, et cetera. So just adding into that long-term strategic mindset into your own personal life that other companies use around the world, if you have a plan, even if you're going up and down off those zeros that you want or that you projected for, that you're expecting to get to, the plan keeps you going through the ups and downs, right? And I think this is what's really important. And it aligns with what we say a lot here on our webcast, which is that when you start your wealth building journey, first of all, start it anytime, and any person that you are, no matter what your means are, start some version of a wealth building journey. But when you start it earlier, and you have somebody like you, Carlos, who can help advise you and guide you in a long-term strategic plan, that sounds to me like a brilliant solution for peace of mind.
Yeah,
and ultimately
absolutely.
wealth building, which by wealth building, although we can talk about the 5 different kinds of capitals. I think you were discussing that earlier, but and wealth building is a holistic term in the sense of the financial freedom can give you a lot of capacity for other kinds of wealth generation in your life too, including the wealth of peace of mind.
Yeah, absolutely. Gosh, there's so many ways that the discussion can go here, but a big issue. Oh, Roland, please go ahead.
No, I was thinking, to have some focus. I think that you told me that you all had been developing a new program, specifically a planning service for people that wanted to focus on investing in real estate.
We have a lot of real estate investors as clients in the firm. It's not a particular program, but it's something that we just have a lot of experience in. Absolutely. So we work with a lot of real estate professionals where that is their primary business, and others that are, sort of limited partners or passive investors. And in that case, their position is more like, what they do with other equity or sometimes debt, but mostly equity investments in private businesses as opposed private real estate investments as opposed to publicly traded stocks or REITs or other items that you can find in the public markets. But once again, the way that we want to allocate a client's portfolio goes back to their values and their goals, but also their risk tolerance. This is something really, really important. People have a lot of, what is the word I'm looking for? Cognitive and behavioral bias. There's a lot of emotion involved. And that's usually not a good thing. I want to say, because the idea of, getting double-digit returns or doubling your money in 3 to 5 years, it's very, very appealing. We really, really encourage our clients to do as much due diligence as they can when these sort of opportunities present themselves, because very naturally people have a tendency to sort of fantasize about the upside, the potential upside, and they never really consider the cost of a potential downside, which is very, very real, especially when we're talking about, private investments. Private companies go to zero all the time, probably more often in the last couple of years than in the previous 10 years. So it's something that you really, really have to be careful with. It's something that we want our clients to be aware of, that if you are sort of chasing higher returns, there's going to be a commensurate, risk involved there. So can you afford the potential downside? This has to be crystal clear. That risk has to be absolutely clear to the client. And because of the sort of cognitive bias, people kind of don't want to think about that. But it's real, it happens, and it needs to be considered. So yeah, the risk profile is absolutely something that needs to be addressed, particularly when we're dealing with higher risk investments.
Yeah, I mean, we're experts in writing about risks, aren't we, Sarah?
Yeah, and the observation is that people want to hear the good news.
Oh, goodness. Well, the truth is, there's a lot to unpack when it comes to the emotional side of investing. There's an interesting writer and a thought leader. He wrote Morgan Housel is his name. He wrote the book, The Psychology of Money.
I've read that book.
Yeah,
it's good.
It's a really great one. It's very, very eye-opening, and it really sort of underscores all of the sort of qualitative variables that need to be considered when investing. Because the sort of best case scenario sounds great. We are naturally attracted to that.
Right.
And we are also very naturally, we sort of block out the possibilities that things don't always go as planned, but they do.
Right. Yeah.
So,
No, I think you can always find also I think with the prevalence of social media, there are stories out there about,
goodness.
this guy, the crypto guys, right? They made so much money doing this one thing. Everybody did this
Yeah.
one thing, right? And you're like,
Yeah.
well, it's not reality necessarily, right? So, or one person had that reality, or 10 people or 100 people, but how many millions of investors are there when you take the world as a whole? So,
yeah. And, obviously, great results exist and they do happen, once again, the risk has to be extremely measured. In addition to sort of deep due diligence, which I really highly recommend, you never see an offering memorandum that says, "Hey, we're going to break even." Nobody says that. Or this is going to lose 20%, or obviously go to zero. So it's once again, it's easy to sort of be seduced by this. I also recommend to our clients to take a good hard look at the sponsor of any private deal, and I would highly recommend that the sponsor in question. It's really important that they have gone through a previous market downturn. I absolutely believe that.
That's a good point.
I was around for the '08 financial crisis. Lessons have been learned since then. And, these sort of lessons are really sort of taken. So this is something that I would highly recommend. When you're looking at sponsors, it's a good idea for them to have experienced a downturn. And obviously, to have weathered that storm. I think you can sort of proceed with a little bit more confidence if you know that the sponsor has had to, deal with a very difficult situation in the past and they survived.
Right.
Sarah, I was going to go where my thoughts went is the long story concept, right?
Yeah, exactly. I don't know if you had a chance to look at, we had a longtime friend of Roland's, a man called Larry Powell on, and well, anyway, Roland can give you his background, but he talked about having the long story with people that, whether it's your investment advisor that you're hiring or whether it's a deal that you're participating in, it's the same concept, which is talk to the person for a long time about a variety of topics to find out more about, not just about the deal. I mean, the pitch deck is not even necessary to look at when you interview, say, a potential sponsor of a deal, probably. You just need to, there are other questions to ask and it takes time. And so this is, Roland, did I summarize it well enough?
Well, yeah. And I was just thinking if they have a short story, if their long story is a short story, then just make sure that, if they're really enthusiastic about crypto and they're 25 years old, they haven't gone through a downturn in the market. And so I may not, I may take their enthusiasm with a grain of salt, but yeah, for sure. I mean, it's like putting aside all the projections, the pitch deck and everything. And who are you, investment management sponsor, sponsor of the deal or management of this private company? We need to know who you are personally. And I think you mentioned it before, just this qualitative evaluation of the person that you're investing in and understanding their integrity and having confidence in that, because with small business, there are fewer people that are involved and you're heavily reliant on that small number of people. So yeah, I mean, I couldn't agree more that getting to know the managers, and this applies to you as well. Get to know Carlos before you hire him. He'll talk to you for a little bit. He's a salesperson. The same thing with Sarah and me. Before you engage us as attorneys, get to know us a little bit.
Yeah. I imagine this is the case at your firm, but at Austin Wealth Management, there's 16 of us here, soon to be 18. So it's not just my expertise, it's our founders' expertise. We have advisors, we have certified financial planners. We have portfolio managers. We have, customer service agents. So, there's a team of people behind our services, and I think that's really, really important as well. It's not dependent on one individual. And when you're dealing with private investments, I mean, everybody has a team to some degree or another, but there is something of a sort of key principle, particularly in these real estate deals. So this is something else that's a little bit different about our model, where there's a team of us. And when you're investing in public companies, of course, there's tens of thousands of people behind those firms with lots of data and history behind their behind their performance over the last 50 plus years. So these are very fundamentally different kind of positions to be in. So definitely study the sponsor and the team. I cannot stress that enough. Yes.
Yeah.
Mm-hmm. Well, Carlos, I think we're coming up on the time that we want to try to focus this in on. And I guess one thing we've talked a little bit about your typical client profile, but we also wanted to give you a chance to kind of leave with a closing message. So those are the two things that we want to cover before we wind this up. So do you want to speak any more to who you're looking for as a typical client?
Yeah, I can address that. Like I said, we don't have any minimums, so we can work with anyone, and we can also work with anyone regardless of their sort of portfolio structures. We have clients whose investments are 100% in the public markets. We have clients that are a little bit more weighted on the alternatives. So we can work with, like I said, practically anyone. Where the, sort of tactics really start to become executed is all based on the plan, the risk tolerance, and all of the aforementioned pillars that we spoke of. It all has to make sense. There has to be long-term growth in the project, and the risk has to be mitigated. There's this adage of the way to get rich is to get rich slowly, and nothing can be more true. I think people need to be very, very careful of sort of sexy and exciting investment opportunities. Because once again, they sound great. It's exciting. But when it comes to long-term wealth building, boring is better, to be perfectly honest with you. And if you're looking for excitement, I suggest that you watch Severance or White Lotus or something like that. In your private life, what you're passionate about, your family, your hobbies. Find excitement in these aspects of your personal life. I've met investors that look for excitement in their financial life. And this goes back to sort of, cognitive bias that I think can really, really hurt people. This is a behavioral, let's call it a flaw, but long and slow, think about compounding, think about small incremental change. And if you design a system, with our help, and you use our team to help you implement the strategies that we just defined together, you significantly improve the chances of long-term success. And that leads me to one final point for a lot of what we do. Earlier, I mentioned that we're in the peace of mind business, and we want to take a lot of the stress off of people's plates. Think about professional athletes, for example. All professional athletes have a coach. They have a team of coaches, right? They're high performers. They are sort of leveraging other people's experience and knowledge, etc. If you're an amateur golfer and you don't have a coach, you will probably be making the same mistakes over and over for decades. And this will become part of your muscle memory. And you will not be as successful as the professional. So my point is, professionals use coaches and amateurs sort of wing it. So I would highly suggest that if you are serious about your long-term financial goals, come see us. We'll establish a system and we'll get you where you want to be in a slow, systematic, and risk-adjusted manner.
I think that's
excellent.
Such excellent.
Yeah, I think that can have a lot of appeal to our audience.
Yeah, right. Yeah, and I think I do have one final question, unless you want to keep adding. Yeah, and it's actually on the personal side, Carlos, because we try to always have a little bit of personal flavor when we interview.
Please.
What is your favorite asset class? Personally.
Oh my goodness, my favorite. Well, okay. I think we have to define our terms here. Favorite in terms of best return or stability.
Well, however you want to define it.
Okay. The greatest wealth building engine, probably in the history of mankind, are the publicly traded stock markets, the equity markets primarily. If you look at the curve of the S&P or the Dow Jones over the last since the post-war era, it is a remarkably steady line, and you can bank on that.
Yeah.
Once again, it is a little bit on the slower side compared to other kind of higher risk, higher return investments. But yes, I'm a big believer in the public markets at the end of the day. It's great to have a diversified portfolio. I think it's also fun to have a part of that portfolio to be I don't know, maybe let's call it your YOLO slice or something like this. If you want to invest in, crypto or, maybe, even some fine art, that's my personal thing. I love that as well. You just sort of have to be very, very measured in your allocations. So
I just want to say that Roland, it's funny because what we've said here from the beginning, we've really focused on making it clear that alternative investing is about investing in private securities or private deals, and that, it's not a substitute for what you're exactly saying, which is something, non-alternative, I guess you could say, traditional investing in public equities and related like cash equivalents. So I think it's funny, we are a webcast about alternative investing made easy because it is, when you take it as a slice of the entire, let's say, global market, it's gigantic. But when it comes to your personal life, what you're saying is exactly something that we echo, I think, which is you need a coach or a guide or a manager, somebody to help you make sure that you got your allocations right, because it's not ideal to be only in the alternative investing side. So.
Absolutely. Yeah.
Well, listen, Carlos, I think that seems to be a natural place for us to stop. And I think it's awesome that we've had you on as a guest and we've gotten to talk about, some of these qualitative aspects of financial planning and understanding that we've got somebody in you that we can refer people to. And maybe at some point in the future, the investors that you work with would be interested in a deal that we're platforming here. But anyway, I think that we'll have a great partnership going forward. And, once again, just, thank you for being a guest with us, and, let our audience know how they can get in touch with you.
Yeah, absolutely. So austinwealthmanagement.com. Now, management in this case is spelled MGMT. So austinwealthmgmt.com. My email is carlos@austinwealthmanagement.com. Also available on LinkedIn. So not terribly difficult to find.
Okay, we'll make sure all that's in the show notes for sure.
Wonderful. Yeah.
All right. Well, thank you, Carlos. And thanks to everyone for watching this episode of Alt Investing Made Easy. If you like this episode, please like and subscribe to our channel.
Yeah. An important affirmation to tell yourself every morning is something wonderful will happen today.
Oh, I love
leave you with that.
Something wonderful
write that
will
one down.
happen today. Okay, well, remember everyone, take aim with your alternative investing strategies.
And something wonderful will happen today. See
Love
you
it.
next time.
Thank you, guys. Bye.